Stay informed on earnings trends and analysis in Zacks Earnings Outlook.
As we progress through the third quarter earnings season, there are a couple of things worthy of taking note. And that is what we're going to talk about, among other things, with our research director, Shiraz Mian. So, taking a look at these earnings reports roll in, right? And the one thing that I'm referring to is with regard to the stock market. Yes. The market is not rewarding companies that beat on their earnings this season. So doing better seems to be getting punished. It's been a while since we've seen that.
That's right.
With earnings. What's going on?
So the market is grappling with a host of worries. Earnings is one of them. And on days when the worries are dominating the headlines and stocks are going down in a coordinated way, in a uniform way, it doesn't matter if you are a company that beat earnings on that day. You will be swept up with the tide. Beating earnings is not enough. You need to beat revenues. You need to have a good guidance and tell a good story about your business as well. And not all companies are able to do that.
Well, on the other side of that story, it's not just companies doing, beating, getting punished. It's companies reporting weaker than forecast earnings, getting more than usual punishment.
Absolutely. They are getting taken to the cleaners, absolutely, yeah. So missing estimates, any of those estimates, you miss EPS estimates, revenue estimates, or your guidance is weaker than what's in the market, produces a lot of pain for those stocks. And that's what we are seeing. And the reason for that is that the operating narrative getting into the Q3 earnings season was that the earnings picture is good. We had seen that in the last few quarters, and what the market was looking for was reconfirmation of that everything is good narrative. Now, the majority of companies are still providing that reassurance, but every now and then, particularly in some pockets, in the industrials, the materials, those with more foreign currency operations, when they come out with any weakness, then the market is resetting entire expectations for the coming quarters, and that's why they really get punished.
So does all of this lead you to be a little concerned about peak earnings growth maybe in the fourth quarter?
I think we were qualitatively talking about a number of these issues: the strong U.S. dollar, the impact of tariffs, some weakness in emerging markets, but cost inflation too, particularly labor and freight and all those. And we are starting to hear all of these things from companies in certain areas. So like Caterpillar came out and they mentioned all of these factors. A number of these companies came out and mentioned quite across the board the impact of the dollar. Yes, growth has been, the high point has been reached already. The way you look at it, if it's a year-over-year basis, we saw that in the previous quarter. If you do a rolling basis, then it's perhaps in the last quarter, but we are almost there.
So once we see peak earnings growth, can negative earnings growth be far behind?
I don't think so. I think earnings are still growing. Growth is positive. We will have to get to a recession for earnings to earnings to have the year-over-year comparison to be negative or to show a decline. So I don't see an earnings recession or negative earnings growth. The last time we saw that was because of the energy sector, and I don't have anything like that on the horizon that would make me project that.
So where do we stand now as far as the scorecard, as far as revenues, margins?
Okay, so I have this slide which shows, so as of today, we have 279 S&P 500 companies have reported results already. We are past the halfway mark. 55.8%, as this slide shows, of index members have reported results. Total earnings for these companies, for these 279, are up 22.3%. Total revenues are up 8.4%. 76.7% are beating EPS estimates, and 59.9% are beating revenue estimates. What this comparison chart shows is the comparison, the earnings and revenue growth for these two is 79 across different periods, and then the beat percentages for these companies across different periods. And
that's as of today, October 30th.
October 30th, exactly. Today is the day when Facebook reports results after the close, and GE had extremely bad numbers this morning.
Yep.
So the one area that I want folks to focus on is this revenue picture. Okay. And this is the 8.4% revenue growth for the companies that have reported results already. Folks can see that this growth is weaker than what we had seen from the same group of companies in previous periods. And then the proportion of companies able to beat revenue estimates, this is the lowest since the fourth quarter of 2016. So even though the overall earnings picture isn't bad, by most respect, it's pretty good, but on the revenue side, you have plenty of reasons to worry that perhaps the best is behind us, perhaps the easy growth is behind us, and perhaps the across-the-board growth that we had been seeing in recent quarters, we should not expect that in the coming quarters.
What about standout sectors?
You know, the pain is across the board. As I mentioned, we have Facebook, and then we have Apple reporting later in the week. Technology numbers have been very good, but we'll see after seeing results from these guys. Microsoft reported impressive results. Intel did. Some of the other semiconductor companies have reported good results as well. Financial results were very good, but overall, most sectors have pockets of weakness and then overall strength. So it's good, but not as good as we have been seeing in other recent periods.
Bottom line on the Q3 season when the dust settles.
So here's how Q3 shows now, the 22.2%. That's when you combine the reported results with estimates for the still to come. Okay. My sense is that once everything is said and done, we'll probably be close to 24% earnings growth for Q3, which is a pretty strong showing. And then we start decelerating from this level onwards.
Decelerating going into the end of the year?
Exactly, yeah. So there's a 15.3% earnings growth in Q4 18, and then as you could see, it's in single digits for the first half of 2019.
Yeah, I don't like to see that at all.
Yeah.
All right, well, we know you're going to be keeping an eye on it.
Sure.
And he updates you on the latest trends twice a week on our website, Zacks.com. Earnings preview on Mondays and his written earnings outlook commentary on Thursdays. Link to it all right off the homepage at Zacks.com. With Shiraz, I'm Terry Ruffalo.